I know people, they see it some down days, whatever, and they say, it's the end, guys. It's the down days on that time frame. Then you have to wait and see the accumulation of those down days. Did it really make a dent or an impact on the higher time frames?
We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pains.
That's going to be bonkers.
Okay, guys, welcome to another episode of Talking Trades with myself, Kevin Wadsworth, and my friend and colleague there, Patrick Karim. What we're talking about today is gold. Everybody likes a bit of gold, don't they? And we've seen the gold price moving up to $3,500, and it seems very reluctant to get much further. We've been hanging around between sort of 3,300, 3,500. We actually had a drop of, I think it was $380 at one point. And since then, we've struggled to make any new highs. So, Pat, can you shed some light what's going on with gold at the moment?
Yes, Kevin. Look, of course, guys, just hang in here. I'm going to show you some charts, but you'll see the power of multi-time frame analysis, guys. I'm gonna start in the higher time frames. I won't spend too much time on that. I'm going to zoom in and show you what's happening. So, before a longer-term uptrend, like something a stacker is going to use or a long-term investor, before that starts really falling apart and you go in the multi-year bear market or sideways move, you'll see symptoms on the shorter time frames starting to roll over, right? And if the shorter time frames don't resolve back upwards, then eventually they can cascade on the hard time frames. But one thing at a time, guys. I know people, they see it some down days, whatever, and they say, it's the end, guys. It's the down days on that time frame. Then you have to wait and see the accumulation of those down days. Did it really make a dent or an impact on the higher time frames? So here what I have, it's my monthly chart for gold, guys. Super simple. I have a 12-month moving average. That's that little blue line here. I have a 36-month moving average there. Ichimoku cloud. Look, the takeaway is the price above a shorter term moving average? Let me zoom in for you guys. Is it above the 12-month moving average? Check. Is it above the 3-year moving average? Check. Is it above the Ichimoku cloud? Check, check, check. So that's all good. You're in uptrend. The gold, guys, the gold entries, they were the legendary entries was back in June of 2019. And then you got another legendary entry back here in late December. And that's it. Right now we're in uptrend. There's no legendary entries. But I will bring your attention to the distance of the price from that 36-month moving average. Look how high it is, guys. I'm going to put a vertical ray here or horizontal ray. Check this out. This bottom indicator is how far is the price from that 3-year moving average. And there is always a reversion to mean. So either the price drops, catching up, letting the 3-year moving average catch up, or the price goes sideways and mathematically the moving average catches up. Look how stretched we are. Like historically, look at that. I'm going to stretch it all the way to 70s. I'm going to pop this open. Most of the data points are below this line. So if you look at this really objectively and you don't fall into this, this time it's different. And, this is outlier territory, the 70s. Look at even the 2000s bull run. Once you tag these, this was just before the GFC crash right there. You're in outlier territory, guys. Like even here, if I take that 2020 peak, we're not meant to stay here above. Usually the bulk will stay here like gold. It doesn't mean the price can go up. Could surely go sideways or up, letting a moving average catch up. But the low risk entries, they're found down here somewhere, guys. They're found here when the price goes up, here when the price expands away from the moving average. It's not the case here. Now, right now, 100%, we're closing in on a correction on the monthly time frame. Has it happened yet? Probably once we close below this rising support line, something more important in terms of correction will be morphing into existence for the gold chart. But right now, it's fine. It's been going sideways since April, since we showcased this to you guys probably and to all our followers that we suspected that gold will be having a hard time, and it did since April. Now, I'm going to zoom in on the weekly time frame. So if you want to answer the question, what are the chances of getting that monthly defined correction? Well, okay, let's look at the weekly, because if the weekly is not rolling over, then the monthly cannot roll over. It's impossible. You need the shorter time frames to roll over. So here's the weekly. And here you'll see it's pull. Here's another breakout here. So you have these pull flags here, pull, flag. I'll do it right here, measure, move. They don't always reach it. Sometimes they get close to it. Sometimes they undershoot. Sometimes they overshoot. Like right now, it overshot right there. But look here at the bottom pane. Here's the distance from that 36-week moving average, guys. It was stretched. So that's step one. But what it's doing now, it's actually losing. So 1, 2, 3. You have a rising trend line that lost. So now what it means is 100% the price is in correction mode on the gold chart on the weekly time frame. So if this persists and the gold chart keeps letting that 3-year moving average catch up, the next low risk entry will be maybe somewhere down here once the price starts re-accelerating away from that red line. So right now, 100% measured, classical TA measured move reached and losing rising momentum. So that's not a good sign. And finally, before I close up, I'm going to show you the daily chart. Remove drawings. Daily chart also was super stretched right here back in April. And look at that. It's been unwinding until maybe here I'm going to get eventually a breakout line. I'm not sure quite where it's going to be right now. But until the price starts accelerating above the 36-day moving average, above this line, there's nothing to do here, guys. We are 100% in a correction, even on the daily chart. I'm just going to show you here a clear level so you guys get to, this is a very beautiful 1, 2, 3, 4 points. So you never front run anything. That could be a top in hindsight. We could look at that and say, oh my goodness, this was a top. So right now, gold is hanging on support. Oh my goodness, it's getting close. It's going sideways in correction mode. There's nothing to do here for traders. So the longer term time frame, Kevin, is up. But because it's stretched so high from its moving average and reach all these measured moves, it's vulnerable right now for a prolonged correction. And that would be something healthy you'd want to see right now. You don't want to have a blow off top. You don't want it going to 5,000. You want it to reset, let that moving average catch up, and then take off once again.
Yeah, and I think by the time this episode goes out, Pat, people will know whether that support line held or not. So it's going to be interesting to see if we get that healthy correction. Of course, we are in a long-term uptrend, and a correction, we've said many times, a correction of several $100s would be not just healthy, but normal and expected and needed as well, really. So it's all part of an ongoing bull market and should be seen as an opportunity. If you enjoyed that and you'd like to see more of Pat's brilliant chart work, then don't forget to hit the like, subscribe, and the notification bell for more of this. And we'll see you again for the next episode of Talking Trades. Bye-bye for now.